Hello, good morning. And as the markets start back up after the Labor Day weekend, I thought I would take a look at a couple of my favorite templates to try and figure out what might potentially happen in the upcoming period. So a couple of things I would like to look at are the seasonality by month and expected move. So I'm going to run these templates on the list of CBOE weeklies over here, and after running them, here is the report view. And so I have positioned seasonality into the lower frame, and I've done it just by dragging it around, and you can see a little handle I can drop that into, a little tab. So I've got one of the reports above and one of the reports below, and that's very handy because now I can go over to the month of September in the seasonality. I'll just zoom in a little bit so we can see what is going on. And I've sorted by number of up years, straight number of up years. So in September, the stocks in my list that have the highest number of up years are as follows. You have Domino's Pizza with an average of 5% in September, with 8 up years and 1 down year over the last 10 years. And now that only adds up to 9, but we're in September, so we're kind of discounting this current month. So that's why it's only 9. If you go back to August, you see that 5 and 5 is 10, 5 and 5 is 10 in July. So we have 10 up until the current month, when we're only looking at the prior 9 years, because we can't include this month of data. So looking at this, you have Domino's Pizza. Now Domino's Pizza, when you click on Domino's Pizza, because we have the expected move in the upper panel, we can also see the implied volatility rank. The implied volatility rank, which is based on a count of the number of days over the past year where with implied volatility. So if you have a low implied volatility rank, you know that you are currently in one of the lowest. In this case, the rank is 10, so you're in the 10th percentile of implied volatility based on number of days. And then you have implied volatility rank based on range, and that is then taking the high and the low range over the last year and saying where are you in respect to that range. So you're currently quite low on both of those. So Domino's Pizza is in an interesting situation. You've had this big bar here, which was Thursday in July, 722. And since then, you've had this sort of gradual sell-off on lower and lower volatility. You're coming to meet a 50-period moving average, which it did meet a few days ago, and is looking at bouncing. But overall, this looks to be in an interesting situation. And because implied volatility is low relative to the prior year's implied volatility, that may be a good candidate for taking a straightforward options position. So for instance, just buying a call. So that's one. Next one we're going to look at is the next on the list, which is Southwest Airlines. Southwest Airlines will look at so as soon as I click on the report seasonality by month, you'll see that the expected move report has moved that stock to the top of the list. So I can just scan across here and see that you have an 8 and an 8 with implied volatility ranks. Now Southwest Airlines, it has good seasonality for September with an average of 4%, 8 up years and 1 down year. It's currently in a very different market pattern to Domino's Pizza, in that it appears to be, when you just look at the past 6 or 7 months, it's in a downtrend. It's below its 200 period moving average. It's below its 50 period moving average. You might look at this and say, well, it looks to be bouncing, hitting its head on the 50 period moving average and then selling off. However, implied volatility is low. So depending on your outlook here, and my outlook based on seasonality would be positive for September, again, buying a call could be good. If, on the other hand, you believe that these moving averages are setting up for or indicative of a further move lower, you can also, or instead, buy a put. in either case, you're getting a good price for your call or your put because it is in the lowest 8th percentile that it's been for the entire year. So not a bad trade based on implied volatility. Of course, you have to decide on which direction you think it's going to go. But for this particular scan, I'm looking at seasonality, and seasonality in Southwest Airlines looks good. You also note that if you draw a line from current price, you have got to this, what was previously a resistance level, which broke through that resistance level in February, and you're now back down to that level. So either way, it's an interesting level and potential trade opportunity there. Norfolk Southern has an average of 2% in September, 8 and 1. So again, good seasonality for September. If we look at the implied volatility, 7 rank and 8, also quite low. So again, potentially it looks like it's trading at recent lows. So you may expect to move here. Seasonality wise, that would make for a call buying opportunity. Let's look at Ross Stores. Okay, Ross Stores, the rank is 11 and 9, so IV is 27% with a rank of 11 and 9. So again, fairly low implied volatility. You can tell that by looking at the IV30 line in the indicator in the area below. And you can also see that Ross Stores is trading at recent lows. So again, this could make a good call buying opportunity. Let's look at some others that are in this list and see where they are. This one, Union Pack Core, has a lower IV rank, so it's quite low, in the 2nd percentile of implied volatilities. So if you can get, if the spreads are okay on these options, again makes good option purchase opportunities. Here you have EWY, which is your ETF for South Korea. Again, not very low. It's in the 12 and 8th percentile for rank, but has good upcoming seasonality. And then the last one that's with 8 and 1 is Corning, GLW. This is sitting right at the 200 period moving average. Did break down below there. And here you have the IV rank is 0. So it's the lowest implied volatility that it has been over the last 1 year period. So if you're looking at buying calls here because of the seasonality, then they are relatively cheap. So that was just a quick update for a scan that I like to do fairly regularly, which is looking at seasonality. Since we've just started a brand new month, I'm looking at seasonality by month, looking at September, and then I've also run the expected move for the next 30 days to see where the implied volatilities are, to see whether there's a good opportunity for buying calls or puts. That's it for now. Thanks for watching. See you in the next video.